Welcome to lecture 15 of business taxation. We are continuing our discussion on the topic of capital and revenue, expenditure and receipts. In previous lecture we discussed capital and revenue expenditures, and in this one we are going to discuss capital and revenue receipts. I would start with the same example I gave in the previous lecture. If we are going to calculate the tax of a business, then we first need to draw its income statement, and for that we would first need its revenues. We would then deduct the expenditures, and we would have EBT, and then we would calculate taxes on this EBT, right? In previous lecture we discussed this part of the income statement, right? We saw which expense would be included over here, which expense would be deducted from the revenues, so we can have EBT and we can calculate taxes. So these expenses are allowed by the tax authorities to be deducted from the revenues for the calculation of the tax purposes. In this lecture we are going to see which revenues should we include over here, which revenues would be considered revenues or receipts where we would have to pay taxes. For those that we would have not to pay taxes would be called capital receipt, and for those we would have to pay taxes would be called revenue receipt. In other words, those that would be included in this income statement for the purpose of tax calculation would be revenue receipt. So as in previous video we had certain tests or certain rules that we performed to distinguish between capital and revenue expenditure. We were going to do the same in case of capital and revenue receipt. The first one is the sale of an asset. We would have to determine whether the asset that is sold is a fixed asset or a circulating asset. Remember, circulating asset is the same that we saw we called floating asset in our previous lecture. So any amount received for fixed asset would be capital received. So if we sold a machinery that was purchased for multiple years, so that in that case the receipt, the amount that we are going to receive from the resale of this machinery would be called capital receipt, and it would not be included in revenue, and we would not have to pay taxes on this amount. But the amount that is received from floating or circulating assets would be revenue received. So again, the example of a car, there is a car showroom that receives amount from the sale of a car. They are selling a car, or let's just say a bus. Would this sale be called a fixed asset sale or a floating asset? It would be called a floating asset, and the reason is they initially bought it for the resale purpose. They didn't bought it to keep it in the business, but rather for the resale purpose. That is the nature of their business. This is a floating asset, so any revenue or received or the amount received, we would have to pay taxes on them. We would have to include them in our income statement as revenues and calculate taxes on them. But if a company or an organization who bought a car or bus for their use purposes, they bought it, let's just say 5 years ago, and now they are going to resell it. They are selling a fixed assets because they didn't bought it initially for a resale purpose. They bought it for keeping in the business, for their use or generating revenue from it. That asset is a fixed asset, and the sale, the amount that we are going to receive from its sale would be called capital received. Amount received on account of a right. So we saw that the author of a book can sell his right. The author of a song or the director of a movie can do the same. If the amount is received for complete surrender of the right, then it is a capital received. So I sold my book, or I sold my movie that I produced, or the software that I made. I completely surrendered the rights. That means the new owner have the rights, and I would not claim any further amounts or my authority on that asset, intellectual asset. Then the amount received would be capital received. If the right is surrendered, is not surrendered, rather given for a specific time, then the amount received would be revenue received. So there are certain there are companies, let's just say Microsoft, they do not give you, let's just say, a software for they do not surrender the rights of the software, but rather give it to you for use purposes, right? In that case, they are not surrendering the rights, right? The right still remains with Microsoft. They are giving it for the purpose of use to you. So the amount in this case would be a revenue received, and we would have to calculate taxes on it. Substitution of source of income. Amount received for substitution for source of income would be called a capital received, and if amount is received for substitution of income alone, then it is a revenue received. So let's just say we have a source of income and it is our business. This business is a source of income. It means it is generating income for us. So if we are going to receive an amount in substitution of the source of income, then that would be a capital received, right? For example, we sold this business, then we are basically substituting our source of income. It is capital received. We would not have to pay taxes on this, but any amount received for substitution of income alone would be revenue received. For example, there was certain life insurance or certain insurance on our inventory. So in this case, our inventory is damaged and we are not substituting our source of income, but rather substitution of our income, right, alone. Then that is an example of revenue received. Received is to be judged from the point of view of the recipient and not from the point of view of the payer. For example, let's just say we are going to start a new business and we need certain legal services. So if we pay, we incur an expense on these legal services because we are going to initiate a business. From our previous lecture, we know any expenditure incurred on the initiation of the business would be called capital expenditure, right? But what about the this is for the organization that is paying the amount, but what about the organization that is receiving the amount? For them, would this amount be called capital received or would it be revenue received? So first thing, we need to judge it from the point of view of the recipient, and we need to consider whether it is a capital expenditure or revenue expenditure for the party that is paying it. So although the party that is paying it, for them it is a capital expenditure, but for the party that is receiving it, that is the lawyer, it is not a capital received for them. It is a revenue received for them. Why is that so? Because it is their day-to-day routine income that they are or day-to-day business activity that they are performing. Lump sum received. Whether the amount received is lump sum or is in installment should never be considered while distinguishing between capital or revenue received. So sometimes it might confuse us that we have sold certain asset and we are receiving the amount in installment of, let's just say, 3 years, a monthly installment. It might give an impression that it is a revenue received, but rather we should not confuse it. Rather, the question of whether the amount is received as a lump sum or not should not be even considered. Example, so royalty received from transfer of the right. So we saw that if we surrender the right, then the amount received from surrendering of the right would be capital received. Legal fee received for drafting memorandum or article of association of a company. So when a company is going to initiate its business, they are going to need a memorandum or article of association. So for them it would be a capital expenditure, but it would be revenue expenditure for the legal practitioner, because we should not confuse the judgment by considering that it is a capital expenditure to the payer. So it should be understood from the perspective of the receiver rather than the payer. Royalty received on the lease of mine by the way of percentage of price of output. So there are two ways that we can receive royalty. One, we surrender our right. The second, what we are saying is that we would have certain percentage in profit or percentage in output. So in this case, we are not completely surrendering the rights, but rather we are giving it for some time period or at certain percentage. So the point is the rights are not surrendered. So if rights are not surrendered, then the received would be a revenue received. Insurance received under a policy which insured stock and trade against damage. So in this case, it would be a revenue received because the amount is received on account of circulating asset or a floating asset. So stock and trade is our inventory. It is a floating asset. It is damaged, but we are receiving this amount because of this circulating asset or floating asset. So this amount would be considered as a revenue received. Okay, that is end of our discussion on the topic of capital and revenue received. And now we are going to move towards the idea of income from business. So first we need to understand what business is. Business includes any trade, commerce, manufacture, profession, vocation, or adventure or concern in nature of trade, commerce, manufacture, profession, or vocation, but does not include employment. We have already discussed employment, so business does not include employment. So if you are employed somewhere and you're receiving certain amount of salary, then that does not come into business, irrespective of what the amount of salary that you're receiving. So we need to define all or understand all these words that are used in this definition. We start with trade, and what is trade? It means buying and selling of goods for the purpose of making profit. This is included in business. What is commerce? It is a broad term, and it includes not only buying and selling, so it also includes trade, what I mean to say, but in addition to trade, it also includes the services that would help in trade, such as marketing, transportation, banking, insurance, etc. So commerce is a broader term as compared to trade. It includes trade as well as it includes all the other services that would help in trade, right? So transportation would transport goods from one place to another. It is helping in trade. Banking services are helping in trade. So they are all included in commerce. Then we have manufacture. It means to work upon something by hand or by machine in order to turn something different from what it was. So what it means is we have raw material and we turn into something different, right? Finished product or semi-finished product. So manufacture is something, it can be by hand or by machinery, but what we are doing is we are converting something into a different thing. So it doesn't necessarily mean that all those people who are working by hand and manufacturing products are not included into manufacture, but they are included. Then we have profession. and it includes any income earned through intellectual skills or through manual skills which are controlled by intellectual skills. For example, teaching, right? Doctor, these doctor would include a manual skill, but those manual skills are not as the skills that are performed by a labor, but they are controlled by intellectual skills, right? Similarly, lawyer, uh, it is an intellectual skills. Surgeon, accountant, these are intellectual skills. So the earning that they would have would be considered an income from business. But here we need to make it clear that a doctor might have an earning from two sources. One, he might be working as an employee in a hospital for which he would receive a salary. Second, he might have his own clinic. So this salary is not income from business, but this amount that he's receiving from his clinic, which is a profession, would be considered as income from business. Then we have vocation. It means the ability of a person to do some particular work, generally by application of manual skills. So here we had manual controlled by intellectual skills. Here we have manual skill. For example, uh, carpenter. For example, one can say dancing is kind of manual skill, right? Uh, so that is again vocation, and it would be considered as as a business. Then we have adventure in nature of trade. Remember, in definition we had this term adventure in nature of trade. The transaction can be termed as an adventure in trade or adventure in nature of trade or commerce or manufacture if some element of trade or business are present in that task. It is not necessary that all the elements would be present, but some element should be present for it to be called adventure in the nature of trade. Okay, once we have understood that which income would be called income from business, uh, we move forward and see what incomes are exempted from taxation. So, all the universities and education institutions are organizations, and they might seems like a business, but all the universities or education institutions that are built not for profit purposes would be exempted from income from business. So they might have an income, but they would be exempted because the purpose or the constitution is not under the company's ordinance or partnership act, etc. They are not for profit purposes. Then income from the export of computer software built in Pakistan are again exempted. Certain type of industries are protected. They are given subsidies because the government want to promote them. The government might want that the software houses might flourish. So if they are exporting certain computer softwares, and that software is built in Pakistan, their income would not be considered as income from business, and it would be exempted from taxation. Again, agricultural income we have discussed multiple times. Agricultural income is also exempted from uh, income from business taxation. And lastly, NGOs. These are non-governmental organizations. Their task is to help certain certain aspect of humanity. Any income that they produce would not also be considered as income from business.